Hi, everybody, welcome back. This is video number 3 of my series on the Berkshire Hathaway meeting. It's May 5th. I'm just back. Early in the day, Buffett got a question on real estate, why in this environment Berkshire was reluctant to use some of the cash to invest in real estate. And over the years, we've seen that Berkshire Hathaway has tended not to do large real estate transactions. Interesting, as always, take that Buffett had on this. Real estate takes a degree of negotiation and time that's not necessary or really even relevant in the public markets. He did point out that as an intellectual game, Charlie Munger did, especially toward the end of his life, but even at the beginning, as a lot of you know from the history of Charlie Munger, enjoyed the game of real estate development and real estate transactions. But even then, Buffett said that at the age of 21, had Charlie been presented the opportunity to either do stocks or real estate, what would Charlie pick? And he said Charlie Munger unquestionably would have chosen the stock market. There's so much more opportunity for the individual investor, but even the professional investor in securities markets. In real estate, you're dealing specifically with a single family or a single entity, single owner of the real estate, versus in the New York Stock Exchange, you're dealing with anonymity, which Buffett prefers. The second thing, on the New York Stock Exchange, he pointed out billions of anonymous people and trades complete in seconds. In other words, the transaction will close very quickly, again, in less than seconds. He said you could transact millions of dollars worth of even Berkshire Hathaway on the New York Stock Exchange very quickly. In distressed periods, though, like 2008 and 2009, Warren Buffett and Berkshire Hathaway did participate in some real estate transactions. He personally did a few. He points out that with real estate, you also need to watch every sentence. Every sentence is important. Now, let's take this away, Berkshire Hathaway versus the individual investor. A lot of people make the error of conflating Buffett's experience in present-day Berkshire Hathaway with what you should be doing. In other words, should you be walking around with a very large position in large cap value stocks like American Express, Coca-Cola, or should you be looking at vintage Buffett, 1950s and 60s Buffett, smaller things? I would argue for the smaller things. He's not competing with you anymore. The same thing with real estate. If you have a particular edge or you're shown transactions that meet the criteria of getting much more than you're paying for, then real estate can indeed be a value investment. Berkshire Hathaway can't go out there with its hundreds of billions in cash and make a meaningful impact in the distressed real estate market or even in the non-distressed real estate market. And there aren't a lot of values that are readily present to somebody that large, obviously. The second thing is Buffett is talking about his specific circle of competence, right? Over the years, his specific circle of competence has clearly been in the stock market and in buying control positions in corporations and in companies. You may have a different circle of competence, and sometimes you might have overlapping circles of competence in both real estate and stock investing. Again, the other piece is paying attention to the fact that in the stock market, if you make a very large error, you can undo that error with anonymity. In real estate, all the time, unless you're part of a real estate investment trust or some publicly traded vehicle, the mistakes can be made, as he eloquently pointed out, even after the transaction. It's not easy in, easy out, and often the devil is in the details. So just a very pointed discussion, because again, if you're dragging around $300 billion, it's an obvious question to ask. Would you be going and buying commercial or residential real estate? Remember also, though, that through his Clayton Homes investment and others, Benjamin Moore, and even the Berkshire Hathaway real estate agencies, he's exposed to real estate. He's just exposed to real estate through corporations that hit upon it. And it's not just those few examples I give, but consider the fact that they are, or we as shareholders are, exposed to paint to manufactured housing, one of the premier manufactured housing players in the country, and even to carpeting and flooring and furniture. The Nebraska Furniture Mart furnishes homes across the Midwest. Anyway, he's indirectly exposed to both residential and commercial real estate through Berkshire. So not entirely dismissing the asset class, but again, giving a lot of food for thought. Thanks, and remember to subscribe.